So the FOMO finally got me, and I joined up with Sharesies and Hatch. Hang on a minute, I'm just missing something. Oh. Got my coffee and Sharesies. Back to what I was saying. So I decided to join two of New Zealand's popular investing platforms, which is Sharesies and Hatch. As you know, my portfolio consists of mainly ETFs and index funds, so I decided I'd give individual companies a try. What is up, friends? My name is Gifford and welcome to another video in my garage where I talk about personal finance, property investing, and my journey in the stock market. If you're already a millionaire, then this channel is probably not for you, but if you're like me, who one day wants to reach that milestone, hit that like and subscribe button and follow me as I try to reach for my goal in financial freedom. With that said, let's get on with the video. So the main reason for opening up a Sharesies account was to have a go at individual stock picking. As you know, I already have an Invest Now portfolio which is filled with ETFs and index funds. So the problem with index funds and ETFs is that it all gets kind of boring. In my Invest Now account, it's just a set and a forget where I put a certain amount of money each week, each month away, and then I forget about it. The thing I like about Sharesies is that I can try to pick individual companies to get a higher growth of return. Now, the only problem with that is there's more risk. So with that risk in mind, I've decided to put 80% of my money into Invest Now in the ETFs and index funds, and then only 20% into Sharesies or Hatch. So with this approach, I know that 80% of my money is in stable, diversified accounts, and the other 20%, I have a chance to play and learn more about the stock market as a beginner. So just on the personal finance side of things, before I started investing, I made sure that I topped up my KiwiSaver to get the free government contributions every year and pay off all my high interest credit card loans, because the interest rates on those are normally higher than what you'd get from the stock market. And if you pay those off, it's less risk. It's 100% gains. And also to have an emergency fund, which is normally about 3 to 6 months of your expenses. And the last one is to always invest money that you can afford. So I'll be aiming to invest at least $100 every week. So that would mean that 80% of that, $80 of that would go into ETFs and index funds, and the other $20 every week would then go into Sharesies or Hatch. So since researching individual companies in the last 2 weeks, I've learned that no one knows what's happening in the stock market. It's going up one day, it's going down one day. The stock market does not match the real world situations where countries have been locked down. So just before I show you the portfolio, we'll just have a look at the Sharesies fees because they're very important. So just from their website, at Sharesies, we have a base subscription fee that covers all investors in investing in funds. If you wish to invest in companies, there are transaction fees that apply for each order. Find out more below. So if you have a portfolio of less than $50, it's free. If you have a portfolio of $50 to $3,000, it's $1.50 per month. Or if you have $3,000 in your portfolio or over, it's $3 a month. Or you can pay an annual fee of $30 a year. So it really pays to have more than $3,000 in your account. But all that being said, let's have a look at the portfolio now. So rule number one in investing is not to lose money. So just make sure you do your research before you do put your hard-earned cash into these platforms, that you make sure that it's safe and legitimate. So just inside the computer here is the Sharesies interface. As you can see, this is the portfolio. The overall value is $265.73. And that is made up of 50% is in the wallet and 50% has been invested. Now, before we go into my holdings, so since I didn't know much about investing, I decided to get a subscription to this company called Simply Wall Street. And what it does is it has this discover function where you can have a look at stocks that might appeal to you. Some of the tabs here is buy the dip, forecast high growth stocks, potentially undervalued, believe in the hype, growth at a reasonable price, and established, profitable, and undervalued. So what I did is I actually clicked on one of these ones here, potentially undervalued, and the stocks that I was looking for were long-term stocks as opposed to stocks that had been beaten down because of the global situation. I wanted to find stocks that were actually performing well before then and that can handle the crisis that it's facing now and then come out of it and slowly raise their share price back again as the economy starts coming out of the lockdown. Okay, so let's just have a look at how I actually use this. So I use about 4 or 5 of the tabs here. Now it's just really important to understand that I don't look at all the information. The amount of information available to new investors is really overwhelming. So for me, because my portfolio and individual stock picking is only worth about 10 to 20%, I don't want to be spending days and days analyzing the data and understanding these business concepts when I'm only going to be investing a small amount of money. So I have a look at the executive summary, and then I have a look at its pros and its risks. So the pro here is that the site thinks it's trading at 41.7% below its fair value, and its earnings are forecast to grow at 18.45% per year. Its risks are highly volatile share price over the past 3 months, which is understandable. It has a large one-off items impacting financial results. Okay, so the next important tab that I like to look at is the valuation. Currently the price is $3.22 and they have it undervalued by 41%. So its fair value they've given it is $5.46. Now just bear in mind that this is only this site has priced this. It's also important that I should really look into what I think the value of the stock is by looking at its financial records, but for now, as a new investor, I will take this information. So just remember the fair value they've given it is their own assumption of where they think the stock should be. So you shouldn't take it literally that the stock is going to actually go to that value there. Now the next tab that I like to look at, because of the global financial situation, is the financial health of the company. I want to be spending my money on a company that's going to make it through this dip and all the problems that it has created of the economy on hold. So I have a look down here and it has short-term liabilities. So short-term financially they can cope, and also long-term financially they can cope and get past this. So what this means to me is that if I put money into this company, they are unlikely to go bankrupt. So the last tab I look at is management, and here what I'm looking for is the CEO and how long he's been with the company, and also his management committee, because these are the people that are going to be leading the company into making profits and therefore increasing their share price. So back to Sharesies here, if we go down, you can see that I own 5 companies: Fletcher Building, Plexure Group, Restaurant Brands, Ryman Healthcare, and Somerset Holdings. So these 2 stocks here are limit buy. So I've indicated a price that I'm willing to buy for $20 and $54 respectively. So my first stock here is Fletcher Building with a total value of $19.48. I own 6 stocks. And if we click here, we can see that I bought the stocks at $3.20. And here is the drop. If we go back into 1 year graph, you can see that it was hovering around the $5 mark. So what I found from simply investing is that the company is in good financial health. So I'm expecting it over the years to get back or even surpass this amount. So it is a long-term hold here. So the next stock I have is Plexure Group, where I have $9.42 and I have 10 stocks in that. It's currently down by almost 6%. And as you can see here, I bought the stocks at 93 cents per. Now, if we just go back, it is grayed out because I do have a limit buy on this. So if it gets down to a certain price, I'd like it to execute that price and buy some more of those shares. But for now, I'm just holding off. So my third holding is Restaurant Brands, and I have $38.49 there with 3 stocks, and it's up almost 7%. So the overview is Restaurant Brands New Zealand Limited is engaged in the operation of quick service and takeaway restaurants concepts in New Zealand. So they have underneath them some big companies like KFC, Pizza Hut and Carl's Jr. So what I like about the stock here is that these takeaway places are very popular, and even during a recession, I don't think people are going to stop going to these places to save money. And if we go to their 1 year, and their previous share price, it is pretty much almost back up to where it was. So I expect this to start heading back to where it was before and even increasing. So my last 2 holdings are retirement villages, and these are my favorite stocks. I believe that they are value stocks that will continue to grow over the years. So Ryman Healthcare, and I have 3 shares in that, and Somerset Holdings with 4 shares in that. So if we click here, we can see that I've purchased twice at $12 and at $12.20. We have a look at the 1 year graph. We see that they were previously hovering at the $16 mark and then the big dip. So one of the things that stood out was these 2 retirement villages is that during the lockdown, the health and safety practices of these companies was really good. There was no cases of the illness broken out into them. So that is my small Sharesies portfolio. But as I say, I'll be adding to these positions weekly and hoping to grow them Currently, I'm just going to stick with those 5 stocks because I know about them and I'm familiar with the product. So just very quickly, this is my Hatch account. This allows me to buy US stocks, but I haven't really looked into this further. I've only got 1 stock in this, and the value of this account is 523 New Zealand dollars. So the 1 stock that I do have is Disney. And as you can see, it's literally 1 stock. So I bought it at $166 New Zealand, and its current share price is $194. So I'm up by 16.85%, which is great. And here is my watch list of stocks to look at. I haven't really done any research around this, just these are the popular stocks that I have heard and watched and people have recommended. The reason why I only do have 1 stock is because I don't know enough to invest money into it. I do have 63% of cash in this account, but I don't really know what to invest in at the moment. I don't feel comfortable. The stocks are going up and down and it's all pretty erratic, and I don't understand why they're doing that. So I'm just going to hold off these US companies for now. Just do a bit more researching and learning. So that was my Sharesies and Hatch portfolio. But before we end this, let's just quickly go to Sharesies. So I use Sharesies to manage my 3 platforms, and this gives me a total value of my portfolio. So at the moment it's $4,551.92. As we scroll down, you can see that my portfolio is down by $247.01, which is 5.15%. At this current market, I think that's pretty good. Here you can see my index funds and my ETFs. And at the bottom here, I have the Hatch and Sharesies added. Now what I do with that is, because Hatch and Sharesies already have their own individual tracking portfolios, I just add the value in there, so then I can use Sharesies to track the total value. There's no need to add the individual companies, because then it's just going to be double handling for me, and the other 2 platforms anyway have really good ways to track it, so there's no need to keep doubling up on that. And I find this really useful just to have a quick look at the total value and to see my progress along the weeks. If you haven't already and you want to start investing, my link to Sharesies is down in the description. Feel free to add me into Instagram. If you like this video, hit subscribe. Otherwise, I'll see you on the next video. Bye-bye.